Well, hello and welcome and welcome and hello and welcome. My name is Danny Deals. Of course, you are tuning in to Un Poco Mas, the only show on the interweb that gives you just that little bit more. All the other shows out there give you just enough. They give you no more. We give you more. Guys, on behalf of Hurricane Lopez and Stock Karen, we would like to say hello and welcome and welcome and hello. Guys, Topper time check. It is July 14, 2023. It's 9:30 a.m. out here on the Pacific Coast, 12:30 out in NYC. Hope it's a beautiful day wherever you are. Guys, the SOFI stock today is down just 3 cents. We had this typical SoFi trading pattern, sort of. Let me shoot over here to the daily and show you what's happened so far. Guys, the stock pumped all the way up to about $9.43 in the first 15 minutes of trading, as it does often. And then you saw that dump, but you saw a little hump in it, guys. At 9:15-ish, the stock found a little bit of support, pushed back up, and then they dumped it all the way down under $9. I don't think they stopped very many people out. This huge red candle to get it under 9 was 333,000. The next candle was 640,000. Um, this candle actually broke 9, so this would have been the stop. And then I don't know, they might have stopped out a couple 100,000 shares. Then it was churning. I think this is, retail just starting to buy, and it's been steady buying pressure pretty much ever since, guys. The volume has been pretty moderate today. 26 million shares traded. Average volume is up to 53 million because, as you recall, we had all those days where we were 90, 100, 120 million shares not too long ago. I guess that was, week and a half back or something like that, 2 weeks ago now. Guys, as far as the options, we knew what was going to happen. This always happens. They push up these short-term calls early in the week. Market makers wring all the profit out of them and then dump them like hot steaming garbage on retail investors, and then proceed to push the stock down on Friday, killing all these call options until stupid retail turds capitulate, give in, and go home with their options there worth absolutely zero. You can see there's still some volume open at 9 and a lot more at 9.50. Those $9 calls lost 48% of their value, and the 9.50 calls have lost two-thirds of their value here on the day. That was two-thirds, not two turds. But guys, there's a couple of things I want to talk about. Basically, on the chart here, guys, I've told you over and over again for the last I don't know, the last weeks and weeks that the stock was going to consolidate between $8.13 and $8.91. And I think what we've seen, guys, is we're pushing up now above that range. I think we're looking to, to flip 891 from resistance to support. Now they push the stock lower, guys, but look how quickly the stock recovers whenever they push it down below even $9. Or, my number was 891, but go ahead and use $9 if you like. It's really hard to push that stock down and then it immediately recovers, guys. They're buying back the shares. Retail's buying back the shares. The last couple days, shorts have been covering in mass, which we'll get into, guys. But I just want to give you a quick update on the live short interest. The borrowed change is 6 million to the negative. So you have 6 million returned shares and 87 million borrowed. So the net there is absolutely huge. They're covering, but the short interest is not going down quite as quickly. So there's a little bit of a puzzle there to put together. If you're a little more intelligent than Danny Deals or the brain trust over here at Un Poco Moss, perhaps you can enlighten us down in the comments with something brilliant, something insightful. I highly doubt it. You're probably going to post like an emoji, a crying emoji, some kind of obscenity, whatever you guys are going to do. But I still appreciate it. Even if your comments are idiotic, I appreciate those comments. Um, Guys, exciting news. Of course, Truist came out and reiterated again. Andrew Jeffrey tends to do this. Bless his heart. Whenever these morons spread FUD and are completely wrong, he comes out and reiterates. So Truist Andrew Jeffrey reiterated his buy and $11 price target on the SOFI stock. And I just want to point out, guys, Andrew Jeffrey, out of all of the analysts who rate SoFi, Andrew Jeffrey is probably the very, very best. He's number 101 out of 8,500 Wall Street analysts, putting him just out of the top 1%. His success rate on his trades, this is real back tested data they use at tip ranks. And if you're going to look at analysts' ratings, if you're smart, you ignore them or just use them as buying opportunities when they push down the stock. But if you are going to use analysts, I highly recommend tip ranks. It's the very, very best in terms of aggregating what these analysts actually do with their calls, how good or bad they are. So Andrew Jeffrey, 68% of the time, his trades will make money if you hold them for a year, and the average return is 13.5. So copying Andrew Jeffrey's trades, holding each position for a year, 68% of your transactions would make a profit. So he tends to reiterate his buy rating whenever these asshats like Jeffrey Adelson, little less than a 2-star analyst. He's not horrible. He has a sell in 7, and I understand their concerns on valuation. It's not completely unreasonable, but I think they're off. My price target, of course, being 13.75, is almost 2x young, impressionable Jeffrey here, who's been sent out by his masters to kill the SoFi stock, spread some FUD, kill momentum. But guys, just take a quick look. I mean, Ashwin from Citi, this guy's one of the best analysts out there, making money 60% of the time. He's a buy at 10. You have these Lance Jessurun and BTIG. I think this is a very fishy call, but his success rate so far is 83%. He's a buy at 14. Dominic Gabriel's pretty solid analyst, almost 4-star, 4-star there as well. So and their price target at Bank of America is $10, and that's very telling. Mahir Bhatia is an excellent analyst, as is Ashwin Shurvikar. I'm sorry if I mispronounced your name there, Ashwin. But he's a buy at 10. And you just see, guys, the 5-star analysts, Andrew Jeffrey, Truist Financial. He's a buy at 11. John Hecht with Jeffries, who's successful again almost 2/3 of the time. He's a buy at $9.60, but still maintained his buy rating. And you see these guys, Reginald Smith at JP Morgan looks like he's about 13 years old. Um, he's a 1.5-star analyst. His success rate is 46%. So again, you do better pulling stocks out of your ass, throwing darts at a dartboard, or just flipping a coin than you would following the trades of Reginald Smith, because he's wrong the majority of the time, and his job, I would suggest all these guys, their job is to be wrong. They are intentionally spreading dishonest FUD to very temporarily halt momentum, push a stock down for their traders, their shorts, their options killing machine. And Eugene Simuni, who they only have as a 3.5-star analyst, guys, I think just because he's new with Moffett Nathanson, he's successful 70% of the time. 70% of the time. Andrew Jeffrey, almost 70% of the time. The Chia Pet, David Chiavarini from Wedbush, the Chia Pet, the one of the worst analysts in the country. He's right 37% of the time. Jeffrey Adelson with Morgan Stanley, again, he's right 27% of the time. Kevin Barker, good analyst, right 63% of the time. He's a hold at 8. Okay, Piper Sandler. I'm not gonna scream at you. He's a good analyst. He's entitled to his opinion. But like the Bologna head, again, the bologna sandwich. The look at the beak and the forehead on this guy. It's just, I mean, these shills. Like again, this guy. I think the corruption is obvious. This guy worked at BTIG for 8 years. The guy who sits in his chair now on the pump put a buy at 14. He's never covered the SoFi stock. He's never really covered anything in his life, this Jess run. I don't even know who this guy is, but he puts a $14 buy. And then a couple of weeks later, the guy who used to be in his chair for 8 years and now moved over to Compass Point, he puts a sell on the stock of $5. Nothing at all suspicious there. Once when they're trying to, push people into the stock for the pump, and then when they're trying to dump the guy who just had that, little bit of a nexus, do you think? Little bit of a nexus. But my point is, guys, the guys who are 5 stars, who their trades make money over 60% of the time, they're all buys and holds. Their price targets 8, 960, 11, 14, 10 with Simone. You have a 10 with Citibank. You have what is it, a 10 with Bank of America. So guys, these guys who are at 5, these guys who are at 3, these guys who just downgraded to 7, they're cabbage, guys. They're absolute garbage analysts, and their job is to be wrong because they're spreading dishonest FUD to serve market makers and take money from retail. Guys, it's all basically a big conspiracy right out in the open, but it's not that complicated and it's not that hard to beat. You just have to, do the opposite. Like when this moron, Reginald Smith, who was, basically, you know, sort of all over Noto when he was interviewing at a fintech conference. He's like, "Oh, I love SoFi. I have the app. I'm a customer. I use the app every day. Blah blah blah. It's a great company." And then, when his bosses tell him to come out and put this downgrade on SoFi at $6, that's what he does, or reiteration. It's the same with Morgan Stanley, guys. These guys are a direct competitor with SoFi. So, take it with a grain of salt from a 2-star analyst, and then just look at the percentages. Don't look at the stars. Look at their success rate percentage, guys. This is not fake. This is back-tested data based on the calls these guys make. 27% of the time. Jeffrey Adelson. Tool from Cambridge. Tool, his boss, that lady, Betsy, told him, "Get out there, man. Get out there, you little twit. Make a fool of yourself. Downgrade the SoFi stock." The Chia Pet, Chiaverini, again, worst analyst in the country. He's a 0-star analyst. He has like 1/10 of 1 star. Eugene Simone, who's a buy at 10, right? 70% of the time. Reginald Smith, 1.5 star, right? Less than half the time. $6. John Heck, right? Almost 2/3 of the time. 5-star analyst. Buy and 650 on the SoFi. Andrew Jeffery, best analyst out of everyone on here. Best analyst out of everyone on here. Solid 5 stars, right? 68% of the time. And that's out of 459 ratings, guys. Some of these other guys you see, like, the guy Lance Jesserun from, BTIG, he has 83% success rate, but he has 6 ratings. This guy's like green behind the gills. He's a fresh-faced virgin analyst out there. I mean, then you got the forehead, the bologna sandwich out here. He has 89 ratings under his belt, and he's wrong most of the time. I mean, you want to broadcast a drive-in movie on the guy's forehead, I would suggest you do that rather than follow his stock picks, because he's going to lose you money because he's a fucking moron, and his job is to be wrong. His job is to be wrong. SoFi reiterated at Truist Technologies. They presently have an $11 price target on the stock, and Truist Financial's price objective suggests a potential upside of 22.5% from the company's previous close. Guys, shorts are running absolutely scared today. They're terrified. They're returning shares as fast as they can, but they're still killing the options. Guys, these market makers are very good. I think we have to acknowledge that. Not only the way they use analysts, the way they use the media, the way they use options, the way they use volume, the way they use FUD. They basically can control a stock any which way they want. But the problem is it only works if retail plays along, because it's a zero-sum game. For the market makers to win, retail has to lose, and that means you have to play their game. You have to set stop losses. You have to panic sell. You have to buy high on FOMO and then sell low on panic and stop losses. And if you just stop doing that, they lose, guys. If you stop buying these short-term call options late in the week on FOMO after they've already taken all the profit out of them on Tuesday and Wednesday, they dump them on you on Thursday and then they kill them on Friday, guys. Just stop doing it. I mean, maybe if you want to buy some options through earnings, but there's no catalyst this week, guys. There's no catalyst. Like, just stop doing it. Guys, as you know, a couple of days ago, after the Morgan Stanley horseshit downgrade to $7, a dumb grade, because their price target was previously $6.50. So they actually increased their price target, which is really the only thing that matters. And the label they put on that moved from buy to hold, or from hold to sell, or from neutral to underweight, or whatever the hell label they use. Basically they downgraded the stock and increased the target price. Guys, it's strong arm trading. I want to reiterate, my price target is $13.75, or should I say our price target. Don't want to forget about the venerable Hurricane Lopez and Stock Karen, my bosses here at the firm. But guys, what you want in an analyst, what you want in a stock picker, is a guy who doesn't get inside the numbers, not some nerd punching numbers into a calculator. You want a guy who's out there, doing preacher curls, firing off a few reverse curls, basically doing a fat man workout, because my abs are never going to be in shape. I'm always going to be a little flabby. I'm like Crisco, always a little fat in the can. So what am I going to do? I'm going to cut those sleeves off the shirt like Mac and It's Always Sunny in Philadelphia, and just focus all my time on curls. Just hit the arms, guys, because let's face it, that's all that's going to show when I'm wearing this white trash cut-off shirt and my baseball cap, going down to the Shoney's, maybe the Raisin Cane's chicken fingers, doing other white trash things. Come on, guys. You don't want an analyst who's out there crunching numbers. You want an analyst who's out there crunching curls. And that's what you get here at Strong Arm Trading. Danny Deals, Hurricane Lopez, and Stock Karen. But anyway, guys, I'm a little loopy. It's Friday. Just trying to have a little fun. But I digress, guys. Noto was on CNBC, and let's take a listen.
Orstons there with SOFI CEO Anthony Noto. Julia.
Thanks, John. And Anthony, thanks for joining us here in Sun Valley. I want to start off the conversation. We have so much to talk about, but start off the conversation on that Morgan Stanley note saying that SoFi should be valued as a bank, not as a tech company or a fintech. What's your response to that analyst downgrade?
My response would be we're a diversified financial company that delivers our value proposition via technology. And so analysts can value us any way that they would like. If they want to value us like a technology company or as a bank. If you look at us as a bank, we're a bank that's structuring our business over the long term at steady state to have a 30% ROE. Banks that have a 30% ROE trade at 4 to 5 times tangible book. We're trading below that today. So that's my point of view if you want to value us as banks.
Okay. Well, I want to talk a little bit about some of the news from this week about inflation. We had the consumer price index and PPI today lower than expected, showing slowing inflation. What does that mean for your business itself?
Basically, guys, I mean, this isn't the whole interview, you have to do CNBC Pro to get like the whole 7 minutes. But I saw it before on YouTube. They since, scrubbed it and deleted everything. But he was going over the actual numbers, the actual multiples that Morgan Stanley was using, and just explaining why they're absolutely wrong. And that if you do value them on the basis of a bank that is, doing what they're doing, they are still undervalued. So that call from Morgan Stanley was absolute bullshit. But guys, we already knew that. We've already been over it.
SoFi.
A strong economy is great for our business. We've had a strong economy. It's allowed us to really operate in different environments over the last 2 years. We haven't had the student loan business be as robust as it can be in 2024. But over the last 2 years, we've had 8 record quarters in a row of record revenue with rates going up. I think is in a period of stability where rates are flat, we can operate incredibly well, and we've done really well while they're going up. So
I want to talk a little bit about the student loan business. Of course, SoFi started out in the student loan business, and there have been a couple of big news items that have been very relevant to that. Most recently, the Supreme Court ruling that was rejecting student loan forgiveness. Also, the news around the debt ceiling. What does that mean for your business going forward?
The most important thing for our country is there's clarity. Now now people can decide what they want to do. They have to resume their federal student loan payments. We give them a great option to lower their cost of that payment by refinancing with us if they can get a lower rate, or lowering the payment by extending it out over time, which in this environment where they haven't paid that student loan for 3 years, they may have other costs that don't allow them to make that payment again, so they can spread it out over a longer time and lower the monthly payment. That will be a contributor to our business. It's been a real negative the last 3 years, but as I mentioned, I couldn't be proud of our team in hitting 8 quarters of record revenue in a row. But the fact that there's clarity is most important. I do think the administration has to find ways to give relief for those people that need it, and we're in the right economy to do that now, where before we had to give relief to everybody.
John Ford has some questions here. John?
That's really a great point, guys, because we're out of COVID. Seem to be over the worst of the inflation at this point. So now that we're in a solid, steady economy, it gives, the government more flexibility to help people that are desperate for the help, but it's a smaller group. They don't just have to cast such a wide net and expend, such a huge amount of taxpayer resources. You can really target in on the people that are actually unable to pay the loans. Target in on the people that were scammed by the trade schools that, got a worthless education and were, saddled with a bunch of federal student loans, basically in a fraudulent scheme, guys. Help those people. But you don't need to just forgive for everybody, guys. People have to pay their debts. Just like I did, just like you did, just like everybody else does. You took on the student loan. You have to make a decision. A lot of other people, they decided, hey, I'm just going to go directly to work. Maybe I'm going to, get a union job. Maybe I'm going to go to, learn a trade. I'm not going to go to college. I want to start earning income right away. Guys, it's a choice. You have to be accountable and responsible for the decisions that you make. And if you get yourself into trouble, it's not just up to the taxpayer to come in and just pay off everybody's student loans, guys. I wish the world worked like that and, there was just free money for everyone, but we did way too much of that during COVID. We reap what we sow. That was the inflation. Look at the debt, guys. Look at the national debt. It's not, it's manageable right this minute, but it's still a huge burden on the country, on the taxpayer, on the economy. They're competing with other borrowers, driving up the price of borrowing money. So it's just not good all the way around, guys. Well, let's go back to Noto. I'm so sick of myself. Let's hear from Anthony Noto, CEO of SOFI Technologies Inc. This was from July 12th, just a couple of days ago. He's out in some fancy resort in his champion windbreaker with his salt and pepper hair, squinting. He's squinting with an authoritative gaze at the interviewer, and basically owning Morgan Stanley, making them look like the fools that they are, guys. It's Danny Deals and Poco Moss. Let's listen in. Let's whisper.
Yeah, thanks, Julia. Anthony, you just gave us the case if the street wants to value you like a bank. Give me your point of view if investors are going to treat you like a technology company, focusing maybe on your margins, AI.
Here's the key, guys. They are a technology company that is also a bank. These analysts want to make them be one thing or another when they're both. Guys, there's an objective reality. SoFi should not be valued like banks with thousands of brick and mortar branches and these huge legacy and pension costs, these bloated, inefficient structures that don't work, these antiquated computer and technology systems, their horrible customer service, their 0% interest rates, their endless fees and harassment. Aren't you sick of it, guys? Move over to SoFi. I'm not one to give financial advice, but were I you, I would move everything to SoFi and buy the SoFi stock. Let's hear from Anthony Noto, CEO of SoFi Technologies Inc.
How you're going to grow users and your ability to expand into new markets.
So, John, our business doesn't exist without technology. We have no buildings, we have no branches. You access our product via the mobile phone or your PC. So we're absolutely a technology company. We have our own technology platform, which is also part of our business that contributes 20+% of our revenue. And we're using our technology to power other fintechs and B2B companies. Our growth has been over 40% in the Q1. We had really strong member growth. As I mentioned, record revenue and record EBITDA. We're seeing great trends in our business on the back of our
Sorry, I was just conferring with a trusted associate. That's really key, guys, because when you're talking about their margins, their technology, this is all just getting going. This wheel strategy, Galileo, they're just integrating. I just got the notice just the other day that my credit card was moving from the third-party bank, Bank of Missouri or whatever it was, over to SoFi Bank itself. Everything has not even made the transition on SoFi, guys. Galileo and Technesis, this integration has just come together. They're just selling big customers. Everything is coming together, guys, but it has not started firing on all cylinders. SoFi has never had not only ideal conditions, but even decent conditions. When Noto was there since COVID, this is the first opportunity, guys, with interest rates probably starting to normalize with that latest inflation data. Interest rates could even probably start coming down, I would say, possibly early next year. We have to wait and see. We have to look at if the data holds up, if the economy remains too strong. But guys, these interest rate hikes are going to start hitting the economy this quarter. People are going to start losing jobs. It's going to affect, housing prices, rent prices, I think are finally going to start coming down in some of these hotter markets. So Noto's talking about how good that is for SoFi, how they're finally going to have the opportunity to show what they can do as a company in somewhat normal human conditions, not COVID, not with the federal government taking away the bulk of their entire business. I mean, the way this management has adapted and overcome to these conditions is just extraordinary, guys. And people talking about execution risk clearly haven't been watching. You can talk about other risks, you can talk about margins, but he's basically blowing Morgan Stanley's call out of the water. And thank God, just ignoring Wedbush. It's such a dog shit company at this point. They have no credibility, and it's not even worth his breath mentioning that absolute shill piece of garbage, the Chia Pet.
Strategy to be a one-stop shop for all your financial needs. We're the only company that provides for you on one digital platform all the financial needs, products that you need as a consumer, and we do with a superior value proposition. And that's allowing us to gain huge market share. We've added over $2 billion of deposits every quarter since we got our bank license, and we continue to see that trend very positively.
If your investment
Okay, guys. So, I mean, there you have it. Noto basically destroying the bear case. Talking about if you want to value them as partially as a technology company or just value them as a bank, either which way, they are still significantly undervalued. You notice these bears like the Chia Pet, they never do math. Like they never actually do math. They're just like they read some boilerplate legalese sentence in SoFi's earnings report that if their entire business goes bad, they may need to raise money, and he uses that as a bear argument. I've never seen an analyst so lazy and stupid and dishonest that they would use some boilerplate legal sentence that has to be in every earnings report and use that as an argument. That they'd have to raise money at the end of the year because they're in trouble. And then you listen to the objective facts, they're actually growing their deposits by $2 billion plus every single quarter. Their loans are not defaulting. They have some of the lowest default rates in the industry. Their EBITDA continues to go up every single quarter. They have a strong cash position. They have a large credit facility, much of which they haven't utilized. Why would they need to raise money in a fire sale and an offering at unfavorable rates, Chia Pet? It just doesn't make any sense. Like if you pour water on the Chia Pet's head, will it grow? Will his brain grow? Or will it just be that green fuzz, those alfalfa sprouts, like the old Chia Pet we knew as kids? Guys, let's check in one more time with the short interest before I get you on out the door, get you back to your day. Again, they are covering free float on loan has gone way down. Shares on loan have gone way down, but the estimated short interest, guys, is still above 15%. This data has not updated, so they've returned about 6 million shares. Don't think that's accurate. Cost to borrow max showing 9%. So that's very, very high. That number is usually under 1%. But days to cover have continued to come down and down and down. Days to cover were as high as 7 back late May, even early June. Days to cover were above 6. Now days to cover are sitting just above 2. So, guys, make of this data what you will. Tell me what you think's going on with the shorts. Tell me, who do you trust, guys? A 5-star analyst like Andrew Jeffery with Truist Financial, who is in the top 1% of all analysts in the country and whose trades make money almost 70% of the time, or an absolute shill, dishonest piece of human garbage, in my opinion, such as the Chia Pet from Wedbush, who is wrong 63% of the time. And again, I believe that's because his job is to be wrong. It is all dishonest. It is all theater. It is all a big, huge bunch of crap. You can see it in his smirk. He's like, guys, I'm a 0-star analyst. I'm wrong almost all the time. You do better, again, flipping a coin. You do far better flipping a coin. How are you wrong? How are you educated in this job and you're wrong 2/3 of the time? How would you keep your job if you were trying to be right, guys? You'd be fired. He would have been fired a long time ago. And it's not like this other asshat where he only has 11 rankings. This guy has 280 rankings. His average return is negative. His success rate is 37%. Is it because he is special needs and because he's drooling and because he can't spell his own name with a crayon? No. It's because his job is to be a dishonest, lying piece of shit, in my opinion. The First Amendment gives him the right to lie and kill rallies and downgrade and reiterate 6 times in 1 quarter. And the First Amendment gives me the right to say it is quite obvious to me, given the objective evidence, that, Wedbush has absolutely zero credibility. And this guy's not an analyst. He's a hack. He's a short seller option killing tool. And he doesn't care about his reputation because this is his reputation. And that's the same with a lot of these analysts, guys. Morgan Stanley is a direct competitor. SOFI is taking their deposits. They're taking their customers. If you look at the guys who are right 60 and 70% of the time, they're all buys. They all have price targets, 8, 9, 10, 11, 14. The guys at 5, the guys at 3, the guys at 7, they're all complete dog shit. Guys, that's the SoFi stock. My name is Danny Deals. The show is Un Poco Mas. Checking back in, guys. The volume has absolutely been completely sucked out of the stock. It's 10 a.m. Pacific, 1 out on the East Coast at this point. Volume still holding just over 27 million shares. The SoFi stock down 3 cents or 0.4% on the day. I expect continued buying pressure and the stock to close at about $9.25. But guys, I'm usually wrong, so don't quote me, boy. I ain't said shit. Guys, it's the SoFi stock. It's Friday. I hope you guys have a great weekend, and we will talk again at you on Monday. It's Un Poco Mas for Hurricane Lopez and Stock Karen. My name is Danny Deals. You guys have a great weekend, and we will talk at you again next week. Thanks a lot.